Great, nice having you here. Thanks for taking out time and being with us. So I'll just give you a brief context about the audience and the agenda,
Sure.
and then we can move ahead. Hopefully that will be great.
Sure.
So the audience mostly comes from an early stage background. So most of the folks over here are starting to build a startup, 90% of the folks. And they have joined us in the past few months, like past 1.5 years. So a lot of them. So the agenda would be obviously talking about your experience as a founder and your experience as an investor. And we can take up some questions at the end, if that sounds good.
Sounds good.
Great, great. Perfect. So today we have with us Priya Mohan, partner and investor at Venture Highway. Welcome to Xartup, Priya.
Thank you.
Great, great. Pleasure having you. So Priya is an entrepreneur turned VC. After several years of experience in investment banking, she founded Xartup, and a tech startup, and successfully exited it to Byju's on 2018. So Priya, we'd like to know about you, your inspiration as an individual, and your journey much before building Xartup. If you can share a few anecdotes about your upbringing, your early life experiences, and your initial jobs, and how they inspired you to become an entrepreneur.
Sure. If you don't mind, Shubham, I think I'd like to keep this as conversational as possible. I'm happy if people interrupt because, sometimes you tell the same story again and again, when people ask you a different question, it makes you think about it differently. So definitely. I'm not one of those who need to keep talking for the whole time. Anybody in the audience, feel free to interrupt me. I'll try and be as candid as possible. I think the advantage of getting older is as you get older and older, you get more liberated and you don't mind saying it as it is.
That's great. Yeah.
Let me start with my upbringing, right? I'm born into a very, I would say, semi-traditional Tambram family, born and raised in Madras. As with most Tambrams, I don't know how many of you know Tambrams. I see a lot of North Indian surnames, but you're trained to do math well. That's literally my background, right? Your purpose in life is you have to learn dance, you have to learn music, you have to do math well, you have to do science well. And you're trained to get into one of the top engineering colleges, and your cousins don't help you because they're all incredibly hardworking and smart and everything. I think personally for me, I had a very bipolar upbringing because my parents were two different individuals, right? My father was very early on a big risk taker, was not like a typical traditional guy. He built a very large NBFC. So there was one part of him which I was looking at. My mom was as grounded, as middle class, go to the temple, be disciplined, get up at 5, say your shlokas and all that. So it was very interesting. My brother and I had these two completely different, divergent upbringing at home. Early on in life, what I was very clear about is, that I like to do many things at a time. I was not somebody who was, some people are very good at doing one thing or a couple of things and do it very well, right? I had friends who would take one thing and they would do it extremely well. And, for example, some of these guys will say, I want to prepare for IIT JEE, and they went ahead and spent 4 years in building. I mean, I get restless very fast. That's the kind of a person I am. That's still my personality. And I wanted to explore many things. In the process of having learned Bharatanatyam very early on, I became a professional dancer. So I used to, in school, I barely attended. In the last few years, I used to perform all over India, right? And traveled, and, I used to go with a group of artists. It was a very different experience, incredible experience. A stage performance teaches you different things. And in 11th and 12th, in 10th grade itself, literally, I don't know if you went through this stage as a young kid, you will see somebody who's very articulate, you like, and you want to do them, or you want to be them, right? Like what they're doing. So I was very influenced by a lot of journalist friends of my parents, right? And I was like, suddenly I want to be this journalist. I want to write about stuff. So I remember before my 10th grade exam, I went to this corner, this reporting studio. It used to be called Adyar Times. I didn't know the founder from Adam. I literally walked in my BSA cycle. And I would say, listen, will you give me a job? He asked me, what do you do? And I said, I'm going to finish my 10th standard exam. He laughed and said, you finish your exam, come back during your holidays. I said, no, I'll come back. My school finishes at 3:30 till 5:30. I have dance class. From 5:30 to 8:30, I'll work for you. He said, no, we don't do child labor here. Go back during your holidays. You come and work for me. And that's when I realized in 11th and 12th was a pivotal moment for me because I didn't want to take science, although I did well, which means literally I ruled out engineering and medicine, right? I went and spoke. I had this amazing clarity of thought. I went and sat down my parents and I said, look, and fortunately, unlike my other families, my parents were very chilled out that way. They let me be. They said, you do what you want, because also possibly they know by now that this girl has a mind of her own and it's very hard to like tell her to do what to do. So I sat them down for 15 minutes and I said, listen, I've really thought this through. I'll tell you what I don't want to do. I'm not going to take science because I can't be wedded to studying 15 hours. I want to explore 5 things and I want to just figure out what I want to do, which means I don't know what I want to do, but I don't want to do science because I don't want to like limit myself studying 15 hours. So I took commerce. And then that end of the year, like when I finished school, at a personal level, my dad had a very large business which collapsed. So a significant part of my time went in helping him, sort of structure a lot of things, helping him on the legal side. So I had to grow up very fast. And that's when I also decided that I don't want to pursue dance as a profession. And I wanted to do something because dance didn't give money. And, I just realized, look, I love dancing. I'm passionate about it, but I'm not the best. And I'm not going to try and, put myself into a profession where I know that I don't see myself practicing 10 hours a day. And you need an incredible amount of food discipline, which till today, I don't have anyways, right, for a performing art like dance. And then I decided to do CA because there was a lot of personal thing I had to deal with for my parents. And I thought, do something respectable because my dad was a CA. Okay, next best thing. So I finished my CA. And you won't believe it, at that point of time, I told myself, I swear I will never be an entrepreneur because I saw what my dad went through. I said, look, I'm going to be what my grandparents told me, bloody go, get a job, keep getting raises, go to the US and, join a Google or whatever. Then, I mean, that time there was no Facebook and all, was not as famous, and, get a job and earn in dollars. And then, like life is set. And I told myself, I will just not start something because I don't want to put my family through the risk of highs and lows. It's exactly what I didn't do, right? That's exactly, I guess something is there in your DNA. I guess something is there in your genes or whatever you call it. Literally 8-9 years later, after meandering through everything, and I did a little bit of investment banking and everything. And I was then married and I had, my daughter, she was 2. And I realized, I was working in Veda, which was a fairly large investment bank in Chennai. I had just closed a deal with a very large healthcare company. We raised about 500 plus crores for them. And that's when I said, look, I don't want to be telling stories for somebody else. I want to tell my own story. So I still remember this evening I was having, I couldn't drink then because I was still nursing my child. And I was having this discussion with my husband. And I said, listen, I know I told you that I will always work. And I know we got this house on an EMI. And I know I, said one of us will work because my husband's a first-time founder, but I don't want to work. I want to be an entrepreneur. But the good thing, he said, okay, fine, do what you want. We'll figure it out. 5 years was hell, right? I don't know what we were smoking then, to be honest. For 2 of us to be first-time founders, we've never made dollar money, and we didn't take any money from our parents. We had just bought a house. It was an incredibly tough period of time and we had a young kid. And for 5 years, I did Chennai to Bangalore, Shatabdi and back, building the whole business in Bangalore. But it was the most enriching period of my life, where, if you look back and observe even those little moments of highs and extreme lows, I think the way it builds your personality, I believe personality is built in your edge points, not when everything is stable. It's in the extreme high and the extreme low that your personality gets built, your character gets formed or firmed or shaken or whatever you call it, right? It could be personal tragedies, it could be professional successes. And that's been my experience, right? So I did exactly what I said I won't be doing. And I started Vidyartha as a young mother wanting to change the education process. And then that's the genesis. Sorry, I went on for a long time, but I thought you guys should know the thing. Somebody has asked me, Varunesh, I think, Priya, what's the root of this clarity of thought? What clarity of thought? I thought I just gave you guys enough evidence that I didn't have clarity of thought for the longest time in my life.
Yeah, that's phenomenal to know, Priya. And the counterintuitive approach which you took at that point of time when you had a very different opinion and went against maybe a battle against yourself and found out something pretty amazing. So let's now deep dive into Vidyartha, your founding story. What is your 0 to 1 story? How did you meet your co-founder even, and how did you get started? How were the early days look like? Because eventually most of the folks think that the early days are like pretty fantastic, like building a Google right away from the day zero itself. But would like to know from you in a very candid way, what were those days for you?
Before I get there, I'm just going to take 30 seconds to answer this question. Great decisions first look like bad decisions. Absolutely. I think the problem with decisions is your feedback loops don't come immediately. Decisions are validated as good decisions or bad decisions after the feedback loop comes, and feedback loops take a long time, right? So for me, the framework I've built over my life is you've taken a decision, please be iterative. And I don't know if you guys follow me on Twitter. I wrote this, I have this notebook which I keep writing. I take copious notes of any thought, anything comes or anything I learn, I keep writing. And one thing I realized is the biggest thing we do is, and somebody told me this, right? Like this limiting factor we have is like, that's it. Anything we do is cast in stone, right? What I think we should do is once you make a decision, your job is to keep validating the decision. But if there's a data point to say that the decision is horribly, horribly bad at many points of time, then you have to relook at stuff, right? I think the one advantage that I have as an individual, so not pursuing dance, the framework is very simple, right? I was not the best at it. I was good at it. I was not the best at it. The question I asked is, when I look at professional dancers, they spend 10 hours a day practicing. Can I see myself doing 10 hours of something like dance? No. I love the 1 hour, 1.5 hour of practice, but I don't see myself doing 10 hours of dance. And money was important for me. And at that point of time, so I didn't see myself as this, artists are by nature a little driven away from capitalism to some extent, all my artist friends. So I was not somebody who says, let me see and let the money come. No, I early on had this clarity of what not to do. So that's why I didn't choose dance. Coming back to your question of early years, I would say best characterized with extreme uncertainty, right? And that's the biggest fundamental, foundation of any early stage startup. Uncertainty, because let's be honest, sometimes you don't even know. You have this notion of what you want to solve, but it takes a while even to get clarity on the exact problem to solve. That is why when I sit with founders, right, when I look for clarity of thought, I don't even expect many of them to say the exact problem statement and exact hook. I am more interested in the process they follow, which is how many customers have you spoken? What process or what data points have you gotten to enrich yourself with certain insights which others don't have, right? And then it's a journey. It's a journey of discovering whether the problem statement you picked is right. Are customers punching you in the face or they agree with what you're saying? Whether what you think is value enough for somebody to actually open their wallet and pay you money. So the first 2-3 years was just that discovery, which is what do we need to build? Will people even value this? Identifying the right stakeholders. And it's a continuum, right? And that is something that's the thing. And for me, like, I'll tell you personally a lot of things, right? Like the biggest challenge for many people who have come through the system, right? Like finished my CA, I've finished ISB. When I see to keep away noise is an incredibly hard thing, right? And I'm saying this at 41, I feel sadder for my 14-year-old who's only with noise, right? Like with younger people, there's so much noise around. Because today, validation is not just coming from within, you're also seeking validation from seeing your peers. Oh my God, this guy's raised money, that guy is sold. And that's also happened with me, right? Like I come from my network, I see really successful people, right? When I see my colleagues who've joined Google as a product manager, who's done so well and who are posting pictures, I every day to wake up and go with this belief that you have chosen and you say it's still okay, I'm going to pursue that, is the hardest thing in the first year. Right? And the proxies that you make for why this is the right path becomes incredibly important, right? And you should also figure out, that's where I said, coming back to the point of identifying and being as open as, I'm not being stuck onto this. I'm looking at things objectively. I'm constantly iterating. I'm not like, that's also important. So there's a thin line between being very rigid and being persevering. And every day as a founder in the first 2 years, until you get some validation, raise your funds, get your first 50 customers, that's the biggest challenge. To look at the mirror and say, listen, this is worth doing. This is worth the price paying. This is worth the stress. It's worth getting up at 4:45 a.m. in the morning, leaving my 2-year-old with my husband and going. That's the biggest challenge.
That's already inspirational. We have got a question in the chat box, Priya. We should take that up. Is it important to have a co-founder in the startup? Is there a chance that a startup may not succeed without a co-founder?
No. Look, I think I can argue for a lot of pros for having a co-founder. But having said that, it's also not true when I say there are not successful, and you should go and look up data. There are enough data points of very successful single founder companies as well. But the pros of a co-founder are as follows. If there is an opportunity, I think the biggest pro to me is to have the mental companionship. See, you have that mental companionship at home with your partner, your family, or whatever. I think at work, you can still go back and have a dining table conversation, but nobody will relate to you as much as your co-founder on the highs and lows you're going through. And, we as human beings don't need people to share successes. We'd like to take everything, but you need a shoulder to cry when there is a failure, right? And that kind of mental companionship is very, very, very important. The second thing in a more skill-based thing, I do not believe an individual can cover every part of running a startup. We all have our spikes, but we also have our weaknesses. My co-founder brought in building the tech platform, thinking about it from hiring, managing the thing. While remember, I was still doing 3 days and 2 days, right? I couldn't have built a team and managed them. While I looked at the product, customer, I'm better with sales. I'm better with business development, GTM, that's my skill. So it really helps when two people complement. The third most important thing is to act as a sounding board, right? Having said all this, like in a marriage, it's very important for the founders to have an incredible amount of trust and respect for each of their skills and having the right frameworks to make decisions. I also don't believe you can build a startup with absolute democracy. You can't have all 3 founders, they'll all vote yes. It can't work like that. But what are the vetoes, right? How quickly you move in your decision making? Who will have the final say? I think those are important. But having said that, like Moglix is a great example. One of our investments, Rahul is a single founder. There are enough companies where single founders can be successful as well.
Makes sense. One more question is around entrepreneur burnout. Did you ever face any sort of burnout during your early phase stages or even right now? And how do you overcome it?
I've realized my biggest strength, and I tell this to my team, is I'm not the smartest in the room. I may not be the smartest in the room, but I'm generally perhaps the most persistent. And I think my biggest strength is I don't give up easy, right? So I fall, I dust off and go. I think more than burnout, I've experienced a lot of anxiety, fear, right? And, it's very important to talk to people, not keep it inside. And for me, workout has really been helpful. I've been a runner before. Now I do other kinds of work. I'm a fitness freak. And that really helps me calm down. So the easiest thing for me to do is when I feel very, very heavy in my head or burnt out, I just go for a walk and breathing, right? So that's been consistent. But yes, a high anxiety. Fortunately, I don't think I've come to a stage where I felt a complete burnout.
Makes sense. Let's sort of pivot towards talking about your early stages again. Wherein, how did you get your first customers? How did you validate the idea when you're talking about getting insights from founders? That's what you expect when you are doing a conversation with the founders. So if you can give us an overview from your own experience, how did you sort of navigate through this phase?
Got it. You know what, if you don't mind, I'm just looking at some of the questions. It seems like many of these guys are asking from the point of view of their own startup. So let me kind of give a flavor of, my own experience as a founder and what I look for as a VC when founders come and pitch to me also, if that makes sense. I think, look, um, in the first stage of your startup, I think validating your problem statement and being razor focused on if what you aim to solve appeals to the market becomes very critical. I see many cases where people have a very strong view of the type of product and the solution that they need to build. Okay. But they don't do enough customer dipsticks, or they don't do enough to understand the customer landscape. I think that to me is a very, very important thing. The first thing, at least, we did was speak to many, many schools and actually co-build it with at least 3, 4, 5 schools. The second thing we did was the first 50 schools, two of us as founders actually physically sold to those schools before we built a sales team. Because as a founder, if you don't know how it is selling, I don't think you can outsource it. You may not be experienced or you may not have sales as a skill, but you need to know as a founder what are the talking points about your product, what parts of the product is taking to the customer, why do they want to pay for the product, and that will come only when you have these engagement with your customers. So I would say customer dipsticks and co-building and early stage research about customers. Just, forget about any frameworks what your B school teaches you. Like, you go to an ordinary dhoti guy, right? And I was having this conversation, if you see where he puts his, not dhoti guy, sorry, ironwala. And if you go and have a conversation, I was having a conversation with mine. Before he goes and moves his cart, he figures out what kind of an area it is. Is it next to an apartment? Is it next to you'll be surprised how many of them, they don't put next to individual houses because the number of clothes is very less. The density per area is very less. They go and put themselves behind large apartments because 50, 60, 70 houses will come and give them clothes, right? And then he also manages the price based on it. If he goes to a residential colony where it's like a few apartments, but there's a ton of houses, he charges $20 or $30 per shirt or something, right? But if it's a IT kind of a crowd with large thing, he charges lower, but the volume is higher. And I was amazed, who teaches him all this? He didn't go to a MBA school. I think very first principles thinking on customers, I think, is an incredibly important part for you to build a startup. And that's what we spent a lot of time in the early stages. The second thing is listening to your customers. We all hear our customers, but very few of us listen to our customers, which means that, when we change, we pivoted from a B2B to a B2B to C. That is, and I think that's a mistake we did. We heard our customers, we didn't listen, which means building a large business with getting the schools to pay was becoming harder. So how do we move to using the schools as a conduit to actually getting the end students to pay become incredibly important? And that's the pivot we did. So again, coming back to my point, there are two spectrums, right? Like, you build a very deep tech product where you have patents. It's like a drug discovery. Very few of us are able to do that. But essentially, most of the products lie in serving a customer, serving a pain point, which is, less of a deep tech, more of a, creating something, a workflow or something which is interesting. So that is something, it's very important for you to keep focusing on your customers. I see a ton of questions on individual, thing. Maybe you want to just fine tune this to what these guys are looking for.
Definitely.
Unfortunately, I think I wouldn't advise discussing individual startup ideas here because then it becomes really hard. I think we should keep it to general questions.
Sure, I would just generalize it, rephrase it, and ask you questions. In that case, we can make the best out of the time that we have. So the first one would be something like, for capital intensive startups, like you mentioned, deep tech startups or something which is hardware intensive. So how should people sort of pivot or go through their customer discovery in the early stages when they do not have a solution?
Can you explain that again?
Definitely. So let's take for an example, deep tech startups or the hardware startups where the solution cannot be built in the initial days, or which requires a lot of infrastructure development or investment in the early days. So without having the product in place, how can they validate the idea, or how should they implement and go forward at that stage?
Look, I think it's incredibly hard to do that, right? Like, I think, look, there is, in a startup, there's the founding team and the product and the customer, right? This is the triangle of thing. when you're talking about a really deep tech product, if you're saying, look, it's going to be hard for me to, capital raising is going to be hard, right? And if it's going to be like, you're a first time founder, you don't have the kind of pedigree, you don't have like, enough thing. With all this, just to validate an idea with a deep tech kind of a idea in head, it becomes very, very, very hard, right? And it's even in the valley, if you see some of the examples, people have actually gone and built prototypes very quickly and tried and tested, because you need somebody to evaluate your product. So testing it, just see, because what you do is, if you just validate the problem statement with the customer, all you know is it's a good industry to begin with, but you're not able to demonstrate what is your right to win. Why would somebody invest in you to solve that problem? And that is something that you'll have to demonstrate as first time founders.
Makes sense. Hopefully that answers that question. Moving forward, I'd like to understand, someone is asking a question around giving discounts in the early days. So it becomes very easy to acquire customers in the early days by giving huge discounts. Maybe in the cases where startups are growing up, it might make sense. But in the early days, what do you sort of suggest for founders who can build a startup and sort of trying to acquire initial customers? How should they go forward?
Actually, that's a great question. And look, again, I don't think there's standard answers for that. It's largely a framework that you have to use. I think it's growth versus unit economics versus monetization, right? And at different points of time, you need to focus on different things. So for anybody who takes a very black and white approach to that, it becomes incredibly hard. Look, because, at the end of the day, much as we say all this, there are large companies created, and you can't create large companies without taking a certain form of risk and taking a certain form or a set of experiments. Some work, some doesn't work. So you can't have a very black and white brushstroke to all of this. Coming to discounts, I think the framework that I typically use in my own portfolio or tell my founders is as follows. I think, again, comes back to wallet share versus value creation. If you fundamentally are using the discount as a measure to say, hey, this is a way for me to incentivize you to come and check out my product, which is X times better than the alternative, and which is just getting the horse to the water. I think using discounts, like in SaaS, they use a freemium product where they don't charge you for a month and then you start charging, is okay. But if discount becomes the only value add in the product, that cannot sustain from a unit economics perspective. So you bring the customers, and then you have to figure out whether these customers continue to stay without the discount. What other parts of the product are making the customers stay compared to alternatives? If the answer is yes, then yes, you may lose some customers for discount, but you're retaining these customers. Then the way to look at it is look at the customers you've retained, double down on them, and see how this hook, which is working with these customers, can be extended to others, and keep going back. And then eventually you give less and less discounts, the network effects play, you get more. But if discount becomes the fundamental reason why somebody, say, for example, I'll give you a very rudimentary example, right? It's the same apparel, you're buying in two platforms, but you're coming to a platform because they're offering 10% more. Okay, you come to that platform, but if you're able to bundle and get them to buy 5 other things, which the other platform does not have, it makes sense. Or the platform has such amazing collection or SKUs that this guy comes back again and again, you're able to get an LTV, which makes up more for this discount. Okay. But otherwise, all things being equal, the guy is coming here only because you get a 10% discount more for the product. That's not sustainable.
Got it. Got it. On the same note, there is another question. What should be the right timing to go forward with an investment? Is it at the stage when we are acquiring the initial set of customers, getting some sort of validation, then we should start talking with the VCs? Or is it the stage wherein the startup is growing at a crazy pace and then we reach out to VCs? Just a fundamental.
It is not. I'm sure all of you, I mean, I see enough in Twitter, right? Like where people say, I don't understand how this guy raised money, or how is this happening at an idea. Look, I'll also answer the question as to how do VCs evaluate startups, and then I'll talk about, contain the answer as to when you raise money. There are three parts, right? I'm an early stage VC. I invest even at an idea stage is 0 to 1 stage. At a 0 to 1 stage, you invest more on the founders, whether you like it or not, because there is everything else is hazy. We can also do all Excel modeling and model out and imagine the world and all that, but that's only an Excel, right? So the right to win of the founders and the relatability to the problem statement in the market are the two most important factors for an early stage VC. If I feel the market is large, even if there are gray areas and there's likely to be pivots, as long as there's a very strong founding team. Again, I come back to the point, what is the right to win for this founding team? If there is a satisfactory answer, then that's valid enough a reason to invest. Most of our largest scaled companies, the investments are because the founders have pivoted, because look, you can't do backseat driving. These guys are in the trenches, they are in the market, and they are in figuring out what to do. They will figure out what is the right thing to do. So this right to win as founders, a very incredibly important thing to establish. And VCs have their own proxies to figure out why will you guys win, right? The combination of the founders, your background, what have you done in the past? What is your clarity of thought? What kind of insights? Because understand, we're meeting so many startups. There's always a relative thing that's playing on, right? Like, why is this set of team better than the other? And there's a lot of proxies that we use to invest in that. Given that's the thing, when to raise the first round of capital, if you're a first-time founder, okay, with no connected domain experience in what you're starting and you're just starting, I think it's always good to start with a friends and family round to have some proof of the pudding before you go to an institutional investor. And that some proof of pudding could be, like I said, getting some POC, some form of PMF, right? Like, actually, even if I don't stretch to say, get a product market fit, at least getting 3-4 customers to validate your problem statement, building the product in the right direction, getting some proxies is a good time to go to an institutional investor.
At the same time, we are getting questions around growth and profitability. So if you can share some anecdotes from your experience, as in how were your unit economics primarily during the days of building Vidyartha, and what do you prefer in founders pitching to you? What should be their unit economics at the stage at which they are right now?
Yeah, there is no concept of unit economics the stage I invest in. Almost 80% of our investments, we come in at an idea stage. So whatever pans out in the business is a very hindsight 2020. And I think, it's a very contextual thing, this growth versus unit economics. Again, my request is, people who are following Twitter and everything, it's very hard to take a black or white view on stuff. You can't take the same brushstroke across every company. The problem is, India, we are still many, many years behind the US. A lot of things are just coming up now. Sometimes when you're in a high growth stage and the goal and your focus is to, learn more about the market and grow fast, you tend to spend more than you need. But now when you're in a survival state, then you go and say, no, I don't want to grow. I want to figure out what I want to do as a profitability. I think the best way to look at is, again, the framework that I said, value versus wallet share. You'll be surprised, go back. How many businesses have created value? And value can be in form of convenience, in the form of ease of use, in the form of many things. But have they managed to get a wallet share from the customer? Not really. But the problem is, because you're so focused on creating just the value without validating wallet share, you keep growing until one fine day you pause, look back and say, shit, I want these guys to pay. Then it becomes a little too late, right? So having that value versus wallet share from day one or at different stages. And it's very hard. It's very easy for me to sit as a VC on the board and tell people today, like, okay, fine, stop growth and do this. It doesn't work like this. It's not a car. You can't just bloody change a gear and go. You're running a bloody big business. You have your entire teams oriented towards different KRAs. Imagine it's not like changing a car gear, it's steering a ship into a different direction. Now, it's easier to steer a car and a boat than a ship. So don't wait for it to become a ship for you to take such decisions. So at a founder level, to have such frameworks early on, going back to the customers, stress testing this. Okay, how much will they pay? Is this making sense? Okay, is this adding to my LTV? I am acquiring a customer as X thousand rupees, but I'm able to get only, Y from them, right? What can I do? What are the levers that I can change? Again, when I say all this, guys, I'm not saying you need to get profitable. I'm saying having an eye towards value creation from your customers, having an eye towards what you can control, what you can't control early on and building intel on that becomes incredibly important, and it'll give you an advantage. Like I said, it's very hard to steer a ship. It's easier to steer a boat.
Makes sense. On your value versus wallet share perspective, I think we have got a question and we should deep dive into that. The question goes something like, let's say there is a startup which is bootstrapped, creating something in a very new category. And when they are trying to bootstrap it and trying to acquire new customers, there are competitors who are mushrooming around in the same space and growing at a very high speed. So what would be your suggestion in that scenario?
What's the question? What is the question there?
Bootstrapping versus sort of, let's say, going for VC in a scenario where the idea is in a very new category.
Look, in a new category, you're all even place, right? Like, see, at the end of the day, guys, execution makes the most important thing, right? And look, raising funds, tough luck. And I say this to my kid, right? Like, she came and said, Amma, that, I didn't finish this part or I didn't finish that answer, and tough luck, that's life, right? So which means, there are going to be companies who probably raise more money. There are going to be companies who probably don't raise money. I think that's part of the ecosystem. I think what is important to establish is, if you're bootstrapping and you're scaling, if you're able to demonstrate early on an insight or a superior product compared to, say, the guys who have raised more money, I think that's when you have to quickly be able to show that out and be able to raise more capital. The problem is, and it's a real problem, and unfortunately, I don't have a solution to it, is there are many good teams which are not able to raise capital. Unfortunately, because the ratio of, the number of founders and the growth of founders, and today, startup has become a culture which was not there 5 years when I started. My family was very skeptical when I started out, right? Today, like even a grandmother and a grandfather is encouraging people to start startups, right? Which is great. That's the cultural shift I'm seeing in India. But the capital part is yet to catch up, right? So what happens is, unfortunately, we don't see all the teams. And at the end of the day, people should also realize, as a VC, we are human, right? It's a game of choice. It's a game of opinion. We have all the data. It's a constructed opinion, and we make a point of view. Now, the point of view can work out. The point of view can't work out, right? Like, there are only two possibilities, and we are also trying our best. Now, which means that we pick a company. There are 5 other companies that is not funded. Now, when 3-4 VCs pick 2-3 companies in the same category and fund them, unfortunately, for another VC to come and fund the 5th, 6th, it becomes incredibly hard, because how many markets, especially in a new category when it's not established, there's going to be a 5th and 6th player, right? And it's very rare that a 5th and 6th player without money is growing like this compared to the well-funded players. So what's important to understand is the reality of life, what you can control, not control. You have a great idea, but say you don't have a great network in the VC space. I think it's very important to create proxies to show that you can quickly grow or figure out something to demonstrate that. Try raising friends and family around and quickly iterate. 6 months grow, 6 months grow, go out, 6 months grow, go. Sometimes everybody does not have the luck to raise a $5 million check. But if you raise 250K and then a 750K and a 2 million, you could probably come to the same level. Some of us need to work harder. I had to go through the grind. I'm just saying that's the hard fact of life.
Yeah, makes sense. A lot of questions are around validating a startup idea. I think you took it off in a way that there are deep tech startups, there are startups which can sort of monetize from the early days itself. But if you would like to deep dive into it, give some anecdotes to us, what you have seen with your portfolio companies when they were pitching to you, how were they validating their ideas? That would be interesting.
Look, I think I see to be very frank, very few startups in the stage we invest can even have a semblance of monetization, because everybody is in an idea stage. There's a business model, there's a perspective in mind. Now, if I were to take 2 sets of startups, we have the SaaS startups and the B2C, the consumer tech startups. The good thing about SaaS is you're only spending on people. It's not very capital burning, right? So sometimes it takes a longer time, but if you raise the right kind of money, you have enough time to be able to prove yourself, right? And you'll be able to demonstrate some kind of a thing. There it's about GTM, right? Like, again, within SaaS, there are 2 types of SaaS. You have the sales-driven, marketing-driven, feature-led SaaS, and you have the DevOps, DevSecOps, kind of a thing, which is very developer-led. It's almost like a consumer tech, but within SaaS. That's a harder problem. There are companies, as you know, there's Hasura, there is, Postman, and all of these are great examples of that, right? It takes a while, and Postman took a long time to get where they are, and now they are phenomenal, right? So that's that. When it comes to a consumer tech play, I think early on, having one or two North Star metrics is very important. You can't, with limited capital and with limited people bandwidth, you can't, shoot at 5 different aims. You have to have one North Star metric. If it's a fintech play, for example, how many people will come to our app? How many people, what is your definition of retention? What is making people even download and convert? Why are they staying onto the app? I'm just giving you a random example, right? So having one or two clear North Star metrics and building learnings from it becomes incredibly important before you move to the next journey, which is why when we sit with startups, what I like to do is I don't like to see this grand PMF, which is like 3 years down the line. You need to break it down into every 6 months because it's a continuum, right? And have very specific North Star metrics, revisit if you're not able to crack them, understand whether it's an issue of your own execution or is there a market thing that you're ignoring, right? That is a very important thing. Now, again, it comes back to the point I made earlier. Even growth versus monetization is a continuum. Having an eye on structurally, what kind of a company are you creating? Like the gentleman asked on discounts, you can't build a company on discounts. You can start a company on discounts to incentivize people to come to your platform, but you can't build a company on discounts. So what is that eye on? Where can I create revenue expansion opportunity? Is it happening with at least, it may not happen with 100% of my customers. Is it happening with 5% of my customers? With those 5% of customers, why are those customers alone taking more of me? Can I replicate that? Then cost. Now, today I'm spending, say, $1,000 to acquire a customer. What are my levers? What should I do to get the 1,000 to 900 to 800 to 700? Having an eye on that continuously and building it like this, you can't go like this from day one. It is not possible.
Makes sense. Makes sense. Moving forward, we have a question around unfair advantage. So Anant has mentioned that a lot of startups are doing the same thing, but some of them get invested by VCs and some of them go bust in few years. So what kind of unfair advantages you have seen founders creating in the startup ecosystem for like multiple spaces or sectors? If you can share a few anecdotes.
Unfair advantage. You know what? I had this exact same theory when I was raising. I mean, look, I'm not sitting here as a VC giving you guys gyan. I have heard so many no's you have no idea about. When we were trying to raise, we had about quite a large set of schools. We had 3,000, 4,000 schools. I'd worked very closely with the CBSC, right? And we've built a huge amount of active users. We had an incredible amount of edtech data points. So every other VC kept saying no. In fact, we got great amount of feedback. If you guys get a chance, there's a feedback framework that I've shared, which, today when I look back, I lucked out incredibly. I was at the right place at the right time. And that humbles you if you recognize that luck plays a very important role. Right? And I'm not saying this in any false humility, but it is true, right? There is a lot of luck that happens, assuming that we are all at the same level. There is a constant amount of hard work, perseverance, mental bandwidth and IQ and all of that. There is an incredible amount of luck. So first, let's understand that, right? There's a lot of things in life. There is a significant amount of randomness. And just like there is luck when bad things happen, there's luck when good things happen also. But having said that, it's why do startups, let's go back to the question that I mean, the answer I had like a few minutes ago. India is a very nascent country. We're all trying out a lot of stuff. Can you tell me, you go to a hotel who's set up the first time and he's figuring out guests, and in Bangalore, any new hotel or pub happens, everybody rushes. Great. Every place is not like Bangalore. Let's say you go to Chennai, Pondicherry or something. You go and you start something. How do you estimate how many guests comes? So you estimate the first day you're going to have a crack out thing. You estimate for 250 guests. 50 guests come. You have 150 wastage, right? How can you build anything without iterating? How can you build anything without waste? How can you build anything without, collateral damage? I'm not justifying a lot of stuff. I'm just saying that is the nature of growth, right? So it's very unfair for people to take everything with a brushstroke. There are challenges with individual companies when the culture changes, but at an industry level, I feel the way India is growing compared to 5 years, and that's the goal as young people getting into entrepreneurship should look at. Look at the average, look at the collective growth, instead of focusing on individual companies and saying, oh my God, they have raised and they screwed up and they burnt a lot of money, right? Look, you imagine the pressure that people have when they raise a $50 million check. You can't raise a $50 million check and say, I will grow as a bootstrap company. I will evaluate everything. I will focus on profitability. I'm going to keep 45 million in the bank. I'll only spend 5 million. Do you think anybody will? The reason you're raising large amounts of money is to speeden up stuff. And when you speed up stuff, you have to take, it's like battlefield, right? You have to take quick calls. Some of those calls don't work out, right? And that's the larger thing you have to keep in mind, right? And sometimes you start with a industry thinking it's a great possible industry, but it punches you in the face because that's not a category creator. All of us sitting here and analyzing, that's a hindsight analysis, right? It's great. We have views on, many of the industries. So my point is, I have personally looked at this as a VC. I have, and as a founder, right? Like I have gone through a period of extreme bitterness. I work incredibly hard. I feel like the kind of numbers we had was phenomenal compared to my peers. But today, when I look back, I look at it with a sense of calmness. I know what are the 5 mistakes I did. The 5 mistakes I did was I did not have a single PR talking about the quality of schools and the CBSE thing. Nobody knew us. This whole under the radar, I'm putting my head down and work sometimes doesn't play. You have to talk about stuff that you're doing right. The second thing is, I think a lot of the heavy lifting was done by the founders. I didn't think we had a great next level team. I should have had the ability to hire some strong second level team, right? Who would have helped me expand the horizon, right? And the third thing is, I don't think we were smart about our cap table, early stage cap table, right? Like, but these are all naive things. I didn't know any better. Today, I will do a better job. Now, if my peer has gotten it, he or she may have ticked off in all of this. Again, go back. You are somebody who's investing in a public market stock. You look at 2 stocks, you'll take the data point and you make a point of view. That's what is a VC. I look at 2 people, I make a point of view. So I think just stay motivated, guys. I would not get into this whole, who's burnt what. I think we should all build.
That's great. So moving forward, I think